Do you need to choose your investments in a work-related retirement account, like a 401k, a 403b, a 457, anything like that? Okay, so let's go through how I would make these kinds of decisions. So first of all, if you have not set up a 401k and you have access to one, I strongly encourage you to do that. I also always encourage you to get the full match. So if your employer offers a match, make sure you're doing whatever you need to do to get that full match. So if you already have an account set up, I would encourage you to go back through and see what you're investing in and make sure that it's actually probably a good investment for you. So the first question that I would ask is, what is your preferred asset allocation? And so you'll want to consider, especially between the US stock market, bonds, and the international stock market. Those are kind of the main things that you especially want to consider when you're trying to decide your preferred asset allocation. And so the US stock market is a really good main investment. It has a really good track record, and stocks or equities are volatile, but historically they have grown the most in the long run. The international stock market is something that some people decide that they don't need to invest in because they already have their US stock market, and they figure that since the US companies do business abroad, then that means that they don't actually need to invest internationally, and that's fine. If you decide that you would like to invest internationally, then you can decide how much kind of your stock, of the stock part of your portfolio, how much would you like to be international. And so I've seen recommended anywhere between, 0 and 50% of the equities portfolio to be in international markets. And then bonds. Bonds reduce the volatility of your portfolio, but they do that at the expense of the growth. So historically, your portfolio would not grow as much in the long run if you had bonds in it, and it would grow less. Kind of the greater proportion of your portfolio goes to bonds, the less it's going to grow in the long run. But it's also going to be less volatile. So if you're really worried about your portfolio going down significantly when the stock market goes down, which it always is going to go down, then that would be a good time to add bonds. If you're not worried about that and you know you have 10, 15, 20 years before you're going to need the money anyway, it's perfectly acceptable to have 0 of your investments in bonds. So if you have access to 2 or more companies where you can invest inside that retirement account, then you're going to want to look into the investment options and the fees in order to find the option with the best investment options, and that would be ideally index options and with the lowest fees. So once you've decided which company you want to go with, then you're going to look through your investment options, and I would encourage you to find them based on their expense ratios. So just go through and highlight all of the options that charge less than or equal to 0.2% expense ratio. And so if you don't have any funds that are under 0.2%, then that probably means you don't have any index options, and you're just going to look for what are the cheapest options that I do have and then go from there. So once you've highlighted your cheapest funds, then you're going to look through those highlighted funds to see if you can get to your desired asset allocation and what you're going to need to do to get there. And so a target date retirement fund is a simple one fund option. It likely would include some US, some international, and some bonds. And you could look to see if the percent that it has in each of those is kind of in line with what you were hoping for it to be. If the target date retirement funds in your 401k options are not highlighted because they are not at a lower than 0.2% expense ratio, that probably means that you don't have index options, in which case let's look and see if you have something else. If you do have index options and that aligns with your asset allocation preferences, great, you can go with the one fund solution and you're fine. Note that the bond allocation will go up over time as you get closer and closer to your desired retirement date. If you would like less bonds, you can always choose a date that is further in the future than when you actually plan to retire. Another option is to create your own portfolio. And so you can choose between something like the total US stock market, the total international stock market, and the total bond market. And you can choose your asset allocation based on that. If you do not have access to the total US stock market, you can use an S&P 500 fund, which is perfectly acceptable even if you do have access to a total stock market. Or you can try to approximate the total stock market by doing something like 5 to 10% small cap or small company index fund, 10 to 20% mid cap or medium sized company index fund, and then 70 to 80% large cap or large company S&P 500 type of fund. And know that if you are a K through 12 educator having a 403B, 403bwise.org, as well as their Facebook group, are really, really helpful for that. They have all sorts of resources about what are the best options, what are the cheapest options, how to roll something over from one company to another. They have all sorts of resources that can be really helpful. Feel free to ask any questions that you have, and go ahead and go check out your investments to make sure that what you're investing in is actually in line with what you wanted it to be investing in.